Paul, what are your thoughts on this market action? Is this a knee-jerk reaction? Is it an overreaction, or is this justified? I mean, the markets, and especially the NASDAQ, has had a pretty good run over the last week or so.
Hard to call it anything but a knee-jerk reaction. The real question is, are the ones that you asked next, is this justified? We think so. The market has been leaning towards inflation coming down. The headline rate did come down again, but look, even if the month-on-month number was just a tick higher, 0.1%, that's with energy prices down by 5%. So the more worrying factors here are going to be persistent, and that's core inflation was twice expectations, and services inflation. As long as people have cash and they still want to get out and do things post-COVID, they're going to be buying services, and that's what's going up here in price. So we think this inflation will be more persistent than perhaps the market does right now. And we think the Fed, as Mike said, the Fed is going to make sure that it sees inflation below its targets or at its targets before it starts to really ramp off the aggressiveness.
Yeah, but Paul, does this change anything in the Fed's trajectory? We did hear an extremely hawkish stance from Fed Chair Powell a few weeks ago, and the market, while it's starting to price in the possibility of a 100 basis point hike, it's not really seen as super likely at the moment. So what does this actually change?
I think, yeah, you're right. It doesn't change the immediate prospects. We think 75 is what they'll do here in September. They're not in a hurry, but they are determined, and the markets seem to miss that the last week or so.
Paul, while we're talking about inflation and CPI, and that's important today, clearly because of the news, but I wonder if we should also be talking a lot about demand, because Q4 is right around the corner, and the next step after you raise interest rates for persistent inflation is demand slows. We're already starting to hear, even here at the Goldman Sachs Communacopia Plus Technology Conference, different ways that demand is slowing down, even in enterprise, when it comes to deals getting pushed out, or maybe difficulty expanding with existing customers or landing new customers, depending on the company. How much should investors be thinking about that impact that's perhaps coming?
This is the really hard part for a strategist, because on the surface, you've still got a lot of liquidity. The Fed's numbers last week showed $5 trillion in checking deposits in this country. That's 4 times the previous pre-pandemic record high. So much cash out there. That's on the surface. But under the surface, yeah, demand is really struggling here. The housing, you go to some of these big box stores and all the people are in the grocery section. They're not buying the clothes. They're not buying the electronics. They're stocking up on the things that they can get cheaply. So that lower 3/5 of the income distribution, they're really struggling here. But investors really are missing that, because on the surface, there's still so much liquidity.